Good morning, Andrew, Dan, Dornbush download number 51. 51. I'm having some deja vu here. Look, interesting time. Profit reporting season. Around 40% of the companies have reported so far. Earnings are down a smidge. Dividends, though, up a smidge. So basically, yeah, it's been sort of a bit of a nothing sort of earnings so far. And, you know, we've been looking at a couple of different companies. You're looking at Tassal, I'm looking at Sirtex. So do you want to maybe start off with the Tassal story?
Michael spoke about Tassal, didn't he?
Did he? About
a few downloads
ago. And
so you should know what Tassal is. Tassal are salmon farmers, mainly in Tasmania, but they also have bought a retail seafood business, Costi Seafoods, so that sells into the retail market as well as exports, where most of Tassal's salmon is for the domestic market, into Woolworths and bigger supermarkets.
Yeah, and I mean, I was only thinking the other night we were out at dinner and, you know, there were 6 of us and 2 out of the 6 were eating salmon. And, you know, you can just see there's more of that penetration of salmon coming into the market.
I don't think it does the same for you as a good steak does.
Oh, goodness, no. I wasn't one of them. I just want to be really clear on that front. But the people who are health conscious, you know, they really are looking at that stuff.
And the medical people keep telling us we need more fish in our diet, don't they? So.
How does it stack up financially?
Pretty good, Andrew. Price earnings is under 10 times at the moment, 9.9. Yield's low though at 3.3% and only 50% franked.
Okay. So it's more growth.
More a growthy sort of story.
Okay. What are some of the risks? Like if I was
investing? The risk at the moment is there's a Senate inquiry. The Greens senator got onto it from Tasmania and forced this inquiry because abalone farmers and mussel farmers downstream are having problems, and those findings are due out this week or early next week. So that'll be interesting. They report tomorrow whether they make comment about that then as well.
Okay.
So it'll be worth waiting for a little bit before you buy, but I think from an aquaculture point of view and agriculture in general, you know, there's a real focus on that. So
really, you know, if you've got an interest in ag, you've got an interest in health, but also an interest in emerging leaders, not big companies, smaller companies, this might be one to stick on the radar. And like you said, Michael picked it at about 340, it's 370 at the moment, so it's doing the right thing so far.
And Andrew, are we seeing that time in the market where people are starting to get a bit bored with blue chips and looking for growthier sort of stocks?
Well, we spoke a few weeks ago about Glennon Capital, which a number of our clients have taken up. It lists on Friday. GC1 is the code. And in fact, I've just got off the phone from Michael and he's saying exactly that, you know, the people are interested in the Hansons, the Capilano honeys, the Tassals, whatever. So mine, thank you, mine is Sirtex. SRX is the code. And basically they have a treatment, not a cure, they have a treatment for liver cancer. They have a thing called Surflow spheres. They've got 6 manufacturing plants around the world. Last year they sold about 11,000 doses of these spheres. They've got the ability to manufacture about 36,000 spheres a year. So they've actually put a lot of the hard work into the manufacturing already. So any additional doses that they're selling, it's such a high profit margin. And what they're doing is they're putting that money back into research and development, they're putting it back into marketing and also various studies as well.
And when you think about that, 11,000 sold, it's not a great deal, is it?
Oh no, not at all. And yet
worldwide,
they've got 21 million in the bank, they have no debt. I mean, again, we're not talking CSL or Ramsay or some of these other healthcare ones, you know, the more blue chip end of the market. But there is sadly an increasing prevalence in liver cancer. And like I said, it's not a cure, but if it allows people to sort of have 6 to 9 months as the average duration of people's additional life that these spheres have allowed them, we'd love it to be a cure, but if it gives them that quality time with their family, whatever the case may be, you can see the demand for this is ramping up. Their results that just came out were outstanding. Revenue up 36%, profit up 20%. You're not buying it for dividend. You know, we were lamenting Tassal's dividend at 3%. It looks like a superstar. These guys is like less than 1%. But you're buying it for growth.
But that's the health sector too, though, Andrew, isn't it?
Oh, absolutely.
Pretty low across the board.
Because as you know, we went really heavy on the banks 3-4 years ago. We've started pulling people back earlier this year because we thought banks were getting a bit hot, and that seems to have played out. But from a diversification point of view, given the ageing population, given the government spend on healthcare is not going to abate, clients need healthcare exposure. Just briefly on the banks, whilst I think of it, clients will have had 2 offers, one from ANZ and one from CommBank. I think ANZ, we're pretty much a no.
I think we are. The price is less than what their offer is potentially. So.
And their guidance was pretty ordinary as well. Bad and doubtful debts is increasing. Whereas CommBank, I think we're feeling a bit happier.
71.50.
71.50 relative to the market at 78. It's in proportion. So the ANZ is just $15,000 worth. CBA is for every 23 CBA, you get the chance of buying another one at 71.50, which is probably another reason why their share price hasn't suffered as much relative to, say, ANZ's.
Are we going to see Westpac do one?
Well, Westpac did theirs through their notes, but as you know, the notes were only $1 billion, and you know, like NAB did 5 billion, CBA did 5 billion, I think ANZ was 3. So there's certainly scope there for
really
Westpac
jumped
to do
on
it.
the wagon too there, didn't they? Because they weren't talking $1 billion for those notes initially.
So I'm with you. I think there's the potential for them to do that. But anyway, have a chat to one of us when you get those offers. But just as an early heads up, pay more attention to CBA than to ANZ. Otherwise, I think we're pretty right.
I think so.
Till next week. Thank you.
Bye.